Welcome back to our series of talks on capital allowances. Last week we looked at some of the errors that can potentially invalidate a fixtures election with disastrous consequences for either party to the transaction. We're staying with elections this week to tease out a few more points that need to be watched. First, it's worth bearing in mind that an election is only possible where a disposal value has to be brought into account. So if the vendor has not claimed capital allowances for a particular fixture, there can be no election in relation to that fixture. In practice, this commonly affects two scenarios. First, it means that elections are not signed by non-taxpayers who are selling. Second, if the vendor has not been allowed to claim capital allowances, for example in relation to integral features acquired before April 2008, then those fixtures must be excluded from any election. Another point to note is that the Section 198 election can only apply where a disposal value is brought into account in accordance with items 1 or 9 of Section 196. Section 196 lists out various events and lays down the disposal value that has to be brought into account for each. Item 1 covers the majority of sales, even most that are not at market value, but there are exceptions. Item 9 is concerned with a sale of fixtures after the qualifying activity has ceased. An election is not possible, by contrast, if a disposal has to be brought into account because the qualifying interest in the property has expired. In some cases, a broadly equivalent election will be possible under Section 199 rather than Section 198. This applies to an incoming lessee where the lessor would otherwise be entitled to allowances. A further point to bear in mind is that any amount fixed by election is still subject to various restrictions that apply in particular circumstances. In particular, if a property is being bought on which different allowances have been claimed, for example industrial buildings allowances or R&D allowances, a statutory formula is provided to restrict the amount that can be claimed for fixtures in the building. A fixtures election is irrevocable, so it's essential to get it right first time. However, if an election can be shown to be invalid for some reason, it may be possible for one or both parties to claim that it is null and void, in which case a new election may be possible. Time limits should always be monitored carefully, and clients and their advisors should have in place some system to ensure that they are not missed, as, once more, the consequences could be severe. The normal self-assessment time limits for claims and elections are specifically disapplied in relation to fixtures elections. Unless a case is being argued at a tax tribunal, the time limit for making the election is 2 years from the date of this transaction. In this respect, it's important to remember that the election is only made when it's submitted in writing to HMRC, not when it's signed. Each party is required to include a copy of the election with the income tax or corporation tax return for the first period in which the election has a tax effect. Given that fixtures elections are now used in the vast majority of transactions, it may be thought that the need for apportionments has disappeared. The reality is quite different, however, and we'll start to look at apportionments next week. We'll be covering the circumstances in which they're required and the manner in which they are made, and we'll also be looking at a recent tribunal case in which the principles of apportionments were discussed and approved.